Welcome to Rock Your Block and today's segment of This and That with Ernestine Wilson. I am your host, Ernestine Wilson. I am so excited to spend time with our guest today. We have known each other and worked together so long that we are not even sure how we met. Our guest is a mortgage branch manager with CMG Home Loans and has over 25 years experience in the mortgage lending industry. Her focus is to help people through the often daunting process of getting a mortgage. Today we will discuss the importance of credit and demystify some of the perceptions regarding obtaining good credit. So please welcome my friend Susan Apostolico. Hi, Susan.
Hello, thanks for having me.
Oh, yeah, I'm so glad you could come because you moved to the country, and so
It's
getting
good to
you back
get
to
out.
the city
Yes.
could be a challenge sometimes, right? Okay. Well, you're one of the members of probably the most productive mortgage loan team in the Metro DC area. So tell us about your team and the role that each person plays.
Okay. So right now it's pretty much just Vinny and me. My husband, he's the loan officer, and he he takes the loan application, runs all the numbers, does the pre-approval, the refinance, all that. Usually when you call in, it's going to be Vinny or me to help get your information and get you started. And then we also have Amber, she's the processor. So she's going to take you through the whole process all the way to closing.
Okay. And how did you and Vinny get started in the mortgage business? Actually, did he get started and you joined him, or did you start it together?
So good question. He was working as a loan officer and having lots of fun with it. In fact, he had his own radio show for a little while, and I saw what he was doing, and I thought, well, I'll go in and I'll help organize a little bit because I was working as a therapist. And so I went in and started organizing his desk and helping out when I could. And then I left my job and just have been working with him ever since.
Oh, well. So you were a therapist?
Correct.
I never knew that.
Yep, hand therapist.
Ah,
Yeah.
okay. So when I refer someone to you, they call you, and either you or Vinny will start the process. So, yes.
So yes, usually like we like to start with a conversation. If you know what you want and you're busy and you just want to fill out an application, we can do that. But it's nice to start with a conversation just to get the person's goals and get a little more information on income, because when we know what income we're looking at, then we know what documentation to ask for. And I don't like asking for a lot of documents that we don't need. So if someone's self-employed, then I can go ahead and explain to them on the phone, like we're going to need 2 years tax returns. And that kind of help minimize what kind of paperwork is requested up front.
Okay. So during your initial consultation and when you're just guiding someone through the process, what are some of the do's and don'ts that you advise people about?
Well, the first one is if you're getting ready to buy, and obviously you send people over to Vinny or me, and you want to get them pre-approved. So we want to make sure that they qualify, that there's no surprises on the credit report, that kind of thing. But the most important do's and don'ts would be don't change jobs, or at least check with us. Let us know what the plan is, and don't go buy a new car or open up new lines of credit, because once we've done the pre-approval, you want to keep things the same, or at least check with us before making any of those major changes, because that can really take you off track of purchasing.
Okay. So how does credit history factor into the loan approval process?
So a lot of people don't, well, the credit history is It's a difficult question because there's certain things they can go back as far as they want to and look at the history. So if there is a bankruptcy, obviously, you've got to wait 4 years for a conventional loan to qualify. So they can go back as far as they want, but mostly you're looking at, 2 to 4 years on the credit history. And if you've got a line of credit, so say you opened a gas card when you were 21 years old and there's no dings, there's no delinquencies or anything on that, then that's a really good credit history. You want to make sure you keep that and keep it in good standing because that's going to really help keep your credit scores up.
Okay. Well, speaking of credit scores, what is a good credit score?
So there is a little more flexibility in the mortgage industry right now with credit. And I'll tell you just quickly a little story. We had a guy come to us about 4 months ago who had credit scores in the 400s, like you're talking 480 something, right? And traditionally a 620 is what you would need to get a mortgage. But he did everything we asked him to do. In just a few months, he has a 587 credit score. And we were able to get him approved eligible with that 587 just by putting a little more money down. And he's got good income. He doesn't have a lot of savings, but with the 587, he was able to get approved. So 620 is a good target, so if you want to get your scores up and it's under 620, you want to aim for a 620. Great credit is 760 and over, and then anywhere from 680 to 750 is good credit.
Okay. My next question was, what is the lowest score? But you already answered it, which is good, that you can have and get approved for a loan. What kind of loan was that, out of curiosity? Was it a conventional loan or FHA or VA?
That was the FHA. And
Okay.
we have another one that we're working on too, is very similar, is VA. And we'll probably get that one approved soon too, just because the government loans, VA and FHA, have more flexibility in them. And so right now we are seeing a little bit of, a little more flexibility than like a couple years ago. If you didn't have a 620, we couldn't do the loan, period.
Okay. So if a person needs to rebuild their credit, what do you advise them to do? Let's say someone comes to you and they've been late on their car payment, they have a cable bill and the cable company filed some sort of collection report against them at the credit bureau. What do you advise them to do?
So we like to look at the whole picture of the credit report and kind of just from experience, and we might do a credit simulator too, but if there's a collection that's clearly bringing their score down, we're going to try and get that collection removed. So just some coaching, and we've had so much success with removing collections and getting credit scores up that experience just kind of guides us on like what to do next, on how to try and get a collection removed or establish new good credit. So sometimes the best thing to do is open a new card and just establish new credit. So it really depends on where the score is and what their credit looks like.
Well, you mentioned a simulator. Could you explain what the simulator is and how it can help?
So the simulator, there's several different ways of doing it, but when you run it through the simulator, it'll give you options for, usually the easiest way to do the simulator is if you're paying down a credit card. So if you have a credit card with a $2,000 high credit limit and you owe $2,000 on it, that's pulling your score down. So usually if you run it through the simulator, you're going to see, oh, if I pay it down to $900, my score is going to go up 20 points on TransUnion. So it's very specific. You can see Equifax, Experian, TransUnion, and you can kind of play with the numbers to see how much of an increase you're going to get. Because the goal with looking at the credit is the credit scores is to make sure that you're getting the best terms. The goal is to get the best terms for the loan. And we just want to look at it and say, hey, how can we help get your score up to that tier, whether it's 660 or 680, so that we can get you the best terms, the best rate, the lowest monthly payment. Because that monthly payment is what you live in every month. You got to make that payment. So if you can get a little better interest rate, then we want to get you to that 680 or that 720 score, whatever it is. And usually what happens is Vinny will tell me, he'll say, you know, we need 1 point. They got a 719, we need a 720, and then we can get them the best terms, the best rate. And then I'll run a simulator and tell them what to do exactly. But you have to do exactly what you're told. Not a little bit different, but and it works really well.
So the simulator is a program where you input information that tells you what you need to do to make a person's credit better, correct?
Correct.
Okay. How long does that take? Let's, say the scenario that I mentioned to you.
Well, there's several different options. There's one option where we can go in and do it right away. So, 10 minutes later, I could give you an answer. There's other options where you can submit it to people that will run it in all different scenarios. That'll take a couple days to come back. So it really depends on what you're trying to do for the client.
Okay, so the simulator only takes, maximum 3-4 days to tell you what you need to do. Given the scenario that I just mentioned to you, about how long does it take for a person to go through the process and then be able to purchase?
So that varies quite a bit because it depends on where their score is.
Mm-hmm.
So most of the time, I would say probably over 50% of the time, we're going to do the simulator, do the rescore, and get the new updated scores within 30 days or less. But when you have someone that needs more work on their credit, that could take several months. We had one guy who was in the military, had a lot of issues with his credit. We made a plan, him and I worked together, and honestly, it was like a 2-page plan. I didn't think he would do it. He called me a year later. We probably spent hours on the phone getting this plan together for his credit. He called me like a year, maybe a little bit more than a year later, and his credit was there. He had done every single thing on our list.
I can think of a couple of my clients that you've advised, more than a couple, and they've worked it out and been able to purchase. So I know it works well if they follow your advice.
I'm always happy to see someone get their credit score up and get in a house. It's just, that's the most exciting. That's what we do it for, really, because you're changing someone's family tree. When they can buy a house and raise their kids, they've got a backyard or a playground. That's what it's about. So if it takes a year to get the credit where they're ready to buy, and we can really help this, couple or the family and make a difference, that's really what it's about. And that's what gets me excited.
Yeah, that is exciting.
Yeah.
So in general, what does a lender want to see to approve someone for a mortgage loan?
So job history is real important. So you have to have 2 years of job history with, you don't want any big gaps. If there's a small gap, it's not a big deal. But if there's a 6-month gap between jobs, that's a problem.
What's a small gap?
A month or two. Like if
Okay.
you're changing jobs and you want to take a week off or a month off to go visit your mom or something, that you should do that because it's fine. It's not a problem. But qualifying, so your income, your qualifying, obviously your credit score is very important. And then, of course, the assets, your down payment, and that's what we look at.
Okay. Now, how does one qualify for the absolute best rate possible?
So that's a good question because if you've got good credit and income and assets, usually Vinny will go over with you what you can do if you've got all that and you're still trying to get the best interest rate. usually you can put more than 20% down, say 25 or 30% down, and the pricing does get better. So if you have the assets, you can put a little more down.
Okay. So what are lenders most concerned about when they're evaluating a loan? What troubles them?
Okay, so a late mortgage. If you have one late mortgage in the last 12 months, and it's a conventional Fannie Freddie type loan, that's fine. But if there's 2 late mortgages, there's no loan available. So they really want to make sure you're making your mortgage payment on time.
Okay, suppose you don't have a mortgage, you're a renter. What are they really looking for? Are they looking for assets, or what's most important in that instance?
So if you're renting, it's gonna go on your qualifying, like your ratios, like what is your debt compared to your income, and if your ratios are low, that's really important. And then, of course, the underwriter has, certain loan programs. They have the discretion to order a verification of rent. So a lot of times we need to see that you've made your rent payment on time for the last 12 months. And that can include collecting a lot of documentation. So if you don't have a landlord that will fill out the verification of rent, then you have to provide the canceled checks or bank statements showing that you've made your rent payment on time for 12 months.
So don't pay anything with cash.
No, if you can avoid that. Yeah.
Okay. So you mentioned earlier that I don't know if it was here or in our conversation before, but you were talking about lenders and how they've changed guidelines. So it seems like a lot of things changed with COVID. Is that what changed the guidelines? Did lenders become more strict recently?
That is. So I think the guidelines loosened up since COVID. They did get more strict during COVID. There was a lot of uncertainty everywhere, in the market and in the economy. So, but I think it's loosened up again. Things are, the guidelines are always changing. So, if we ask for something that you've never heard of before, it's because, we got the memo.
Okay.
Which is it's constantly changing.
Okay. So at CMG, are there loan products that you offer that the average mortgage company doesn't have?
So I'm probably not as qualified to talk about it as Vinny, my husband, but the all-in-one loan is a product that CMG has that is not out there with any of the other lenders or banks, and that is it's a HELOC on your mortgage, and it is combined banking with your mortgage payment, and it used to be called the McCreary loan. I don't know if you've heard of that.
I'm not familiar with that.
But I would say ask Vinny about it because he understands it very well, and it's an interesting loan that's been out there for a long time, but it's not readily available to a lot of lenders.
Well, I know also that I believe you have some provision where if the interest rate goes down, you can adjust the interest rate for the person who is in the process of doing the mortgage. Is that correct?
Thanks for asking. Yes, we do have a float down option. So if you are purchasing a house and not closing for 30 or 60 days, then Vinny and you have the option to float the rate down if the market improves. It has to improve by a certain amount to be able to float it down, but we've used that quite a bit with many, many clients. And you've probably seen that with some of yours.
I have. Does that cost the client money?
No, there's no cost. It's a way of protecting the relationship and the client, because the last thing you want to do is have a client that's 2 weeks from going to closing but wants to switch lenders because the rates got better and we can't take advantage of that for them. So it's a good way of protecting that relationship.
Okay. I'm going to ask you a question that I'm sure a whole lot of people have asked you, especially realtors. How quickly can you get a loan process from beginning to closing?
So that is a popular question. So of course it depends. You know, if it's a VA loan, you probably don't want to try and do that in a couple weeks. Normal is 30 days, 21 to 30 days on a purchase contract. But can we do it quicker? Yeah, we've done them a lot quicker than that. I think we had one last week that closed in 10 days. But that was the only way they could, have a little bit of leverage with getting that contract ratified. So if we have everything up front, so if you've pre-approved and we have all the income documentation, all the asset documentation, credit's been pulled, we've already got a lot of work done on that file. So at that point, once you get locked in, or you get a ratified contract, you get locked in, we send the disclosures out, we can push it to processing and underwriting very quickly and, close it in 10 days.
And that's one of the reasons that I love working with you all, because I remember one situation, it was a short sale. I needed to have it closed in 8 days. Wow. And you all did it, closed it in 8 days. Otherwise, the property would have gone to foreclosure. So,
wow.
Yeah. You don't remember that, huh?
Sometimes there's that time frame, that timeline, and you have to be able to, deliver. And that's really important. That's why we don't mess around when we ask for docs, and we don't do a pre-approval without having everything verified.
And it's also good because, as you mentioned, when you're in the bidding war with other people to try to get a contract ratified, it's a real good idea to say, I can close in 15 days. I know that's not one of your favorite things to hear, but it's nice to have that option. So
it is, and if
really
that's what the seller's looking for, that's you want to be able to provide that option.
Mm-hmm. And most people do want their money sooner than later. So I have another very important question, and it's about the documentation. A lot of my clients say that loan officers want everything except the firstborn child. So can you explain why you need so many documents for your underwriter?
Yes. So everything on the loan application has to be cross-checked and verified. And where people usually get into trouble when they're saying that we're asking for too much documentation, it's usually because of a bank statement or asset account that they've sent us. So every time we see a bank statement, so maybe you're only 4 days away from closing and we need to source those funds for closing. If there's any deposits on that bank statement, then we need to know where that deposit came from. So a lot of times they send another bank statement, which again shows another deposit that needs to be sourced. So you kind of go down that road. When people transfer money from one account to another, and they'll do that 2 or 3 times during the process, then yeah, it can seem like we're asking for a lot, but it's all guideline. We're only asking for things that Fannie and Freddie require us to have in the file.
Well, we know that there are guidelines.
It is what it is, and we try and keep it to a minimum.
Okay. So can you explain what happens to all of those documents once we go to closing? Where does a loan go then? Because we know that a lot of times people get letters in the mail in 2 or 3 weeks that say, you have a new loan servicer, make your payments to us. So what happens once we go to closing?
So the good news is that at CMG, we service almost 95% of all the loans that close with CMG are serviced by CMG. So chances are you're going to go to CMG's concierge servicing department, which I'm connected with as well. So it is kind of nice to know that your loan's going to stay in the same place. In the past, and like when, any previous lender that I've worked for, then those loans are sold, 100% are all sold, and then they do switch servicers. And that original file stays with the servicer. So if you're sold to Wells Fargo, then that's where your loan is.
Well, that's good. And it will make people feel a lot better because people have had bad experiences with some lenders in the past, and they just don't want to even think about making payments to those lenders again. So it's good to know that your loans are kept in-house.
Yes, I'm very excited about that. I think that is just the future. That's how it should be.
Okay, well, it's only if your pockets are deep enough,
That's
right?
right.
Because if you don't have the money, you have to sell the loans, correct? You have to warehouse them?
I'm not probably the best person to answer that question.
Okay, well, we won't worry about it. Hey, we're almost out of time anyway, so.
Thank you, Ernestine.
We wouldn't have time for your questions. So, thank you, Susan, for coming and spending time with us today. Our time is up. If you have any questions about how to contact our special guest, Susan Apostolico, please see the information scrolling below. Thank you for watching Rock Your Block in today's segment of This and That with Ernestine Wilson. We'll see you soon.